10x research points out the negatives of token unlocks and the weakness of Ethereum. The current bullish cycle in the cryptocurrency market may be shorter than previous ones and is unlikely to end with a significant altcoin rally, according to analysts at 10x Research. The experts suggested that venture crypto funds, which are expected to hold a significant share of coins in the future, might be to blame. Despite high daily trading volumes exceeding $100 billion and the rapid development and updating of crypto projects, there are significant limitations to the industry's growth potential, the company emphasized. Analysts believe that large volumes of token unlocks, nearly $2 billion over the next 10 weeks, could have a severely negative impact on altcoins. According to Token Unlocks, the largest upcoming unlock will occur on May 15 by the L2 crypto derivatives platform EVO, which will release 828.93 million AEVO, $1.17 billion at the time of writing. Of the total supply of 1 billion coins, 18.5% will go to private investors. A smaller unlock of 6.62 million WLD, $39.78 million, by Sam Altman's WorldCoin project is scheduled for July 24, accounting for 0.05% of the total token volume or 2.4% of the current circulating supply. On May 12, Aptos will unlock 11.31 million APT, $101.67 million, about 2.6% of the circulating supply. According to Marcus Tylena, head of 10x Research, weak fundamental indicators of Ethereum and recent trends in its dynamics suggest that Bitcoin will maintain its dominance. Since 2017, the first cryptocurrency has significantly strengthened its position in investors' portfolios and has transformed from a peer-to-peer currency into pure digital gold, the expert believes. During the 2020 to 2021 cycle, Ethereum was a driving force as the blockchain was supposed to replace the outdated banking system. However, Ethereum developers reacted too slowly, the note stated. Tylena claims that the Denkin hard fork, aimed at reducing high gas fees, appeared only 3 years after these issues became apparent. Cryptocurrency users and traders do not sit and wait for the blockchain to eliminate its bottlenecks. Instead, they move on, and today most of the action happens on the second layer. The expert noted that after the update, Ethereum's dominance index fell from 17.8% to 15.8%, and the ETH/BTC trading pair has been in a downtrend since September 2022. Tylena added that the overall locked value in Ethereum protocols is much lower than its peak and is predominantly limited to staking and restaking. The concept of locking Ethereum became flawed as soon as U.S. Treasury bonds appeared on the network with much higher yields, 5%. At the same time, the number of use cases for ETH sharply decreased. The more people realize this, the less demand there will be for the asset, explained the head of 10x Research. The regulatory framework also remains a serious barrier for Ethereum. The uncertainty of the U.S. Securities and Exchange Commission regarding the asset's classification negatively affects it, Tylena noted. In April, 10x Research warned of the market moving towards a decisive turning point, which could result in a serious correction. The main trigger, according to the company, was unexpected and persistent inflation. Binance ignored market manipulation allegations. The world's largest cryptocurrency exchange, Binance, is again at the center of a scandal. The trading platform is accused of deliberately firing an employee who disclosed potential market manipulation. The Binance monitoring team discovered market manipulation by the market maker DWF Labs. The platform's management ignored all statements. This was reported by the Wall Street Journal. According to sources from the publication, Binance fired the head of the service after he reported manipulations by DWF Labs. During an internal investigation, the exchange's employees discovered that the market maker was engaged in fictitious trading and used a fraudulent pump and dump scheme. In response to the accusations, a Binance representative stated that the crypto exchange strictly monitors the market and does not tolerate any abuses. Binance categorically rejects any claims that our market surveillance program allowed market manipulation on our platform. We have a robust surveillance service that detects and takes action against market abuses. Any users who violate our terms of use are suspended from trading, emphasized a representative of the crypto exchange in a comment to Be in Crypto. He also provided statistics, according to which, over the last 3 years, the platform has blocked about 355,000 users for violating the terms of use. Their total transaction volume was estimated at more than $2.5 trillion. We conduct thorough investigations using multiple tools, and we only remove customers when there is sufficient evidence that they have violated our terms of use, added Binance. DWF Labs called the accusations unfounded and distorting the facts. Representatives of the market maker emphasized that they adhere to the highest standards of transparency and ethics. The incident of firing the head of the Binance Oversight Service is just one of the challenges the exchange has faced in recent months. At the end of last year, the platform made a deal with the authorities, paying a fine of $4.3 billion. The crypto exchange admitted to violating anti-money laundering regulations. On April 30, Binance founder and former CEO, Changpeng Zhao, was sentenced to 4 months in prison. However, the conflict with U.S. regulators does not end there. The Securities and Exchange Commission, SEC, has brought additional civil charges against the crypto platform, which it has yet to resolve. The developer of the Exodus cryptocurrency wallet has postponed its listing on the New York Stock Exchange due to the SEC. The developer of the non-custodial cryptocurrency wallet Exodus has indefinitely postponed its stock placement on the New York Stock Exchange, NYSE. On May 9, Exodus Movement was scheduled to list on the NYSE under the ticker EXOD. However, due to the Securities and Exchange Commission, SEC, the procedure had to be postponed. The decision to delay the EXOD placement on the NYSE was explained by the company's representatives by the fact that the SEC is still reviewing Exodus's application for securities registration. However, they called all this unexpected. We are surprised and puzzled by this decision, which was made at the last minute. But we still hope that the SEC will fulfill its obligation and will treat us as required by law. Throughout the process, Exodus adhered to principles of transparency and was maximally responsive, so we expect this issue to be resolved as soon as possible, noted Richardson. Currently, Exodus shares are traded on the OTCQX platform. On May 9, they were supposed to be transferred to the NYSE. On May 6, representatives wrote that they had received permission from the SEC to offer and sell Class A shares. The nominal value of 1 unit of the asset was valued at $0.000001. This important milestone paves the way to create long-term benefits for our investors by expanding our global shareholder base and increasing the liquidity of our shares, emphasized then the CEO of Exodus Movement, J.P. Richardson. Exod shares are tokenized on the Algorand network. This makes Exodus the only public company in the USA whose shares are traded both on a traditional and on a blockchain platform. Exodus was founded in 2015. The company is behind the development of the eponymous non-custodial cryptocurrency wallet, which supports over 300 cryptocurrencies in more than 50 networks. In 2021, Exodus Movement went public. At that time, the company conducted a token sale totaling $75 million and also received a listing of securities on the T0 platform. According to a preliminary quarterly report, for the first 3 months of 2024, the company's net income amounted to $29.1 million. The number of monthly active users in the first quarter was estimated at 1.69 million people. Cardano Foundation appoints a new chief technology officer. The non-profit organization Cardano Foundation, based in Switzerland and responsible for the ADA cryptocurrency, has appointed a new chief technology officer, CTO. The position was taken by Giorgio Zanetti, according to an official statement from the Cardano Foundation. He will focus on open-source solutions. Zanetti will bring to the project his experience in technology development and strategic planning. Generally, his role as CTO will be focused on expanding the Cardano product line and improving the open-source technology based on blockchain. Frederick Gregard, CEO of the Cardano Foundation, called Zanetti's appointment an important milestone for the nonprofit organization. Adding Giorgio to the executive team as our first CTO is a significant milestone for Cardano Foundation. This step reflects our commitment to technical excellence. Giorgio's experience and expertise will help us in our mission to increase the adoption of blockchain-based solutions that enhance user trust and lay the groundwork for new applications, industries, and even economies, he emphasized. Before joining the Cardano team, Giorgio Zanetti was a co-founder and CTO at Procivis AG. The project was involved in developing solutions for identity verification in government structures. Additionally, Zanetti also worked as a software engineer at UBS, one of the world's leading investment banks. The innovative and significant activities of the Cardano Foundation help advance one of the most exciting technologies in the world. In my role as CTO of the project, I am honored to continue the great work in enhancing the operational resilience of the Cardano blockchain, ensuring that we remain at the forefront of technological progress amidst such strong global competition, noted Zanetti. According to CoinGecko, the native token of Cardano has risen by 3.6% in the last 24 hours. Meanwhile, the trading volume of ADA in the past 24 hours has surged by almost 90%. The market capitalization of the cryptocurrency is estimated at $16 billion. Previously, the Cardano coin was included in the list of zombie tokens compiled by Forbes magazine. Experts noted that the high market value of ADA does not correspond to the minimal practical utility of the asset. They pointed out that the network still has not moved beyond the pilot stage. Nevertheless, Cardano developers continue to shed light on blockchain developments. Recently, they talked about two major network updates, one of which is set to occur this year.